All right. So, in some of the previous videos, I mentioned a few times to buy and to sell currency. We talked about pressing buy and sell on your phone to make profit, but we never broke down what it does it actually mean. How do you actually make money? What does buying and selling actually mean? So that's exactly what we're going to talk about in today's video. So, every Forex pair has two currencies. For example, we're going to take Euro USD. The first one is called the base, and the second one is called the quote. Okay, so Euro USD, Euro is the base, USD is the quote. The chart that you're currently looking at, Euro USD, is showing how much 1 euro is worth in dollars. So if you see Euro USD is at 120, that means that 1 euro is worth $1.20. All right. When the price in the chart goes up, it means that the euro is getting stronger. When the chart is going lower, it's moving down, that means the euro is getting weaker. That is essentially the logic of the chart. Now, let's just say that you have Euro USD and you press buy. What does it actually mean? It means that you're buying the base currency and you're selling the quote currency at the same time. If you buy Euro USD, that means you're buying euros and you're selling dollars all in one time. Now, when you press buy, you usually expect price to go up, meaning that you expect the euro to get stronger. If the chart, for example, on Euro USD goes from 1 to 1.100, right? That is your buying point. That is when you press buy. And it moves up to 1.200, that means you have made profit. Simple logic, you buy, price goes up, you win. If you buy and price goes down, you lose. If price is at 1.100 on Euro USD and you buy and the price goes down, that means the euro got weakened and you were expecting it to rise, so you end up losing money. Pretty simple. When you press sell, you're selling the base currency and you're buying the quote currency. So for example, let's take Euro USD, the euro against the dollar. If you press sell on Euro USD, you're selling euros and buying dollars at the same time. When you sell, you expect price to go down. So it means that you expect the euro to get weakened and you expect the dollar to have more strength. If you sell Euro USD at 1.200 and price goes from 1.200 to 1.100, you have made profit. Now, here's where most people get confused because it's pretty easy to understand buying something, price goes up, and then you sell it and you make profit because you can just do that with any regular item. Let's just say you buy a car, a rare car. Let's just say you buy a Ferrari for $250,000. Then 10 years go by, the value of that Ferrari went up, so you sell it at $400,000. You've just made $150,000 of profit. That is pretty simple to understand. But how does selling actually work? Because you're like, how am I selling something that I don't actually own? Well, let me explain this to you in a very simple term. Forex is what we call a derivative market, which means that you're trading price movements, not actual physical currency. All right? When you open a sell position, your broker is executing the opposite order through their liquidity providers. And that is how you're able to sell that currency. You're essentially, to make this as simple as possible, you're essentially betting on price to fall. You look at the price of Euro USD and you're like, I think the euro will get weaker, so let me sell it. I'm betting on price moving down. And if that's actually what happens, and you're actually right, you're gonna end up being in profit, because the broker at the same time, when you open the sell position, has opened a buy position through his liquidity providers. And that is how you're able to sell something that you don't actually own. Now, I'm gonna make a super simple analogy to explain this in order to make you guys understand. Now, imagine the broker, instead of being this entity, it's your friend Mark. Mark thinks that Euro USD will go up, and you think that Euro USD will go down. So what you do is that you bet money with Mark that price will go down. Now, you don't actually need to buy euros or physical currency to do that. You're just betting with Mark, and you think, hey, I think price will actually go down. And if price actually goes down and you win the bet, you make the money from Mark, because he also bet that price would have went up. So he lost the bet and you made the money. That is essentially how it works. That is simply replace Mark with the broker. That is essentially how you're able to sell something that you don't actually own. Now, when it comes to buying and selling, we have different types of ways of buying and selling. We have different types of orders, which is exactly what we're going to talk about in the next lecture. See you all there.